Hey folks, it's Simon here with your Tao market outlook for the week beginning Monday, 6th of October 2025. Weekly chart of the S&P 500 here, SPY ETF. Another strong week, up 1% last week, higher high and higher low for the week. And the S&P's closed out the month of September, which is usually a bearish month, up over 3%. So seasonality did not rear its ugly head at all last month. Now, looking at where we're trading right now, I think the market could be about to enter a trickier phase. I say that because we're looking a little stretched to the upside here on the S&Ps. If we look at the Qs, similar story. We're almost at the the oversold point. We could have a little bit more of a push higher, but we're certainly at an area where I would expect to see a reversion to the mean. The sectors that should be leading are leading. Semiconductors here look really, really strong. But semis also look overextended, all right? So we should not be surprised to see a pullback to at least kind of 320 or so on SMH. Now, the reason I think markets could be about to enter a trickier phase as follows. Now, the first thing is everyone's long. What do I mean by that? Well, there are several ways you can measure whether the marginal buyer or seller is long. One is through the put-call ratio. What often happens is when everybody's long, the put-call ratio tells us that. Now, sometimes this can act as a fairly precise timing tool. Other times, markets can just keep grinding higher, but eventually, they will succumb to some sort of a decline. Now, markets have been clearly grinding higher during this phase, but eventually they're going to come to some sort of a decline. And when everybody's long, that decline will usually be short and sharp, like it was in April. It doesn't necessarily mean the decline is going to be massive, but it's going to feel kind of scary when it happens because it'll happen quickly. We can also see this through things like hedge fund leverage. All right, if we have a look at this chart here, you can see that gross leverage for hedge funds is currently sitting at around 300%, 299.6. That's the 98th percentile. So hedge funds have only been more long than they are now, using more gross leverage 2% of the time throughout history of this series. So that shows, hedge fund community is long. They've got a strong bullish directional bias. Net leverage is positive as well. The other thing that we can see is options activity has gone through the roof. All right, this chart here shows call buying volumes, and now this is a 20-day moving average. They've hit 40 million contracts over 40 million contracts traded a day. Now, if you put this in some sort of perspective, back in the days pre-COVID, it was hovering around 8 million a day. And obviously we had a hockey stick jump up in 2020 when everybody became a day trader, and we've had another massive acceleration. All right, so retail options activity is obviously a part of this, as well as the hedge fund leverage that we saw. So, it looks like retail is all in, as are hedge funds. But none of this means that the market can't go a lot higher either. Now, a lot of talk has been made about how valuations, the AI bubble, valuations are looking bubbly with comparisons to the Dotcom boom. Look, I'm old enough to have traded the Dotcom boom, and I can tell you that shorting a bubble is one of the most miserable things you can try and do. You're much better off participating in a bubble, but just watching your risk like a hawk. Now, an important thing to remember about bubbles is even in a bubble, markets don't go up in a straight line. All right, if you have a look at this chart, this is from the beginning of 1999 to the ultimate top in March 2000, the NASDAQ gained 150%. But during that 15-month period, the NASDAQ experienced 8 corrections of 10% or more. Now, these dips were aggressively bought along the way until finally they weren't. But if you're jumping into the market when it's extended to the upside and everybody's long, you're likely to have a pretty uncomfortable time, all right? Because often one of these little pullbacks is not far away. So the way I look at the S&P 500 right now, it's kind of like a spinning top, all right? So long as it keeps spinning, but if it does get some wobbles, it could fall over fairly quickly. So I think the way to play this is you want to be long, but not aggressively so. It is worth layering in some hedges. And if I do see some counter trend sell signals in the major indices, I will be acting on them. That's what I've got for you this week. I hope it helps, and I wish you a great trading week.